Oh man, could we be days, if not weeks, away from a potential reversal? This is one of the major discussion points here in the crypto space. I'm going to be sharing with you the evidence that some people have been presenting as to whether we could be forming a pattern which could recover us back to some of our highs here on crypto. I'm going to be giving you my take on it. We know the markets are slightly down today. Bitcoin down 1%. The Dixie now starting to bounce, which is a concern for me, which I'm going to share with you. We covered off yesterday the big news of the day. That is the British Bank of England intervening to buy back bonds after the UK government and their decisions around some of the tax rates have led to a disaster in the markets here. We've seen the GBP fall. We've seen the euro fall with their difficulties with inflation as well. We monitor those. We're going to update on those charts, find out what that means for Dixie, because remember, crypto is inversely correlated to the dollar index. Dollar index needs to show weakness for crypto to do well. We saw that yesterday. Crypto had a positive day. I shared my warnings with you. We're going to take a look, and plus some interesting on-chain metrics for you today. Smash some likes. Don't forget to subscribe. As always, if you appreciate this type of content, guys, you know what to do. Hit up the likes, subscribe, let me know in the comments below. So, first of all, hopefully back into my studio tomorrow. Hopefully I won't be this much traveling going on for a while, so that should be good back in my office. But for now, let's swipe you out the way and let's take a look at the pre-market here. Dow Jones down 1%, S&P 1.2% down, and 1.51 on the Nasdaq. You're seeing oil spiking today, in the US 10-year up to now 3.8% on the US 10-year. We need to understand the significance of this. Let's go take a look actually at the chart here of the US 10-year, because we need to understand what does this mean. What this means, and look at that, what this means is this is the view of risk. This is very correlated to the dollar index, because people are commanding dollars right now. They do not want to be in Japanese yen. They definitely don't want to be in our British pound after what they're doing here, and that's fallen. We're going to take a look at that as well. Nor do they want to be in the euro. Huge demand for dollar. US government bond yields are rising, which means now risk-free you can get 3.8% on your US government bonds. Okay, really interesting to keep an eye on that, because again, if these yields spike, could the US government follow the footsteps of the English government in terms of buying back some bonds to bring the yield down? Okay, this is called yield control measures, so we'll keep an eye on that, because that could have a huge effect on the markets as well. If we take a look at the dashboard, Fear and Greed Index is sitting at 22 today. We've got 22 on the Fear and Greed Index. Market's still extremely fearful, but obviously we're in that price range where markets aren't going to be hugely panicked. Bitcoin has and will continue to go test that 18,700 in my opinion. And as long as we stay within that channel, which we've got monitored here between the green lines, I know this is a mess here, between those green lines there, then markets generally feel comfortable in this channel. Okay, in this channel here, markets are used to that because we've been here for so long. Let me zoom out and remind you guys, we first entered this channel dating back to the 15th of June. It's been, a long period of time that we've been in this channel, and markets won't get extremely fearful. It won't get its final capitulation until we lose 18,700 and go test 17,600. But a lot of people are starting to point out some interesting data. I need to share this with you guys. This is the first time that long-term holder spent output profit ratio has now fallen to levels last seen during the depths of the 2018 bear market. You can see this was the 2018 bear market. And now you can see here that we're falling to those same levels down there again, creating that capitulation, showing that even long-term holders are really suffering right now. And could that be the indication of a bottom? Well, let's also take a look at this, which was shared on Twitter by Luke Martin. He's nicely put this here for us. If you look at the previous 2018 bear market, from the all-time high at the peak down to the lowest point, you were in this period for 364 days. Now, if you look at how long we've been from our peak, if you take the November peak of 69,000, we've been here for just shy of 322 days here. Okay, so again, about 40 or so days away from how long we were there in the previous bear market. So for many people, some people are calling this could be happening for a long time. We could be in this for a while, and yes, I think that's still on the table, not because of the crypto cycles and analyzing the crypto cycles, but because we could be having a deeper global recession which could prolong this. We've seen Jerome Powell come out. He wants to hike deeper and for longer. And we need to monitor that as well. Now, the interesting thing is, if you were actually to take this measurement from that peak, then we've been from the 64 peak, because a lot of people say this wasn't a continuation of the cycle, then you can argue we've been in this horrible period for a lot longer. So that's definitely something else to monitor. Now, let's then back that up with something that Crypto Rover was sharing. Let's see if I can pull this up for you guys. Crypto Rover over on Twitter shared this diagram, and he's sharing, and various other people have been sharing this as well, is that on the daily chart, we are starting to see bullish divergence. This is where the price is moving to the downside. Look at the price action moving to the downside, but the RSI is moving to the top side. If you don't know what I'm talking about, link is in the description. Go and watch my free technical analysis course. I don't know why you're not watching it. It's completely free, guys. I could have charged you thousands of dollars for this TA course. Go watch it. It's got everything in there. Head and shoulders pattern, falling wedge, rising wedge, EMA ribbon, Fibonacci retracement. So if ever I'm talking about something and you don't know what it means, it's free. Links in the description. Watch the TA course. Let me know your thoughts, guys. Again, you do not need to be paying tens of thousands of dollars for TA courses. Just go watch it for free and learn it. That's my gift to the community. So please do go take advantage of that. Now, what do I think about this? Well, look, bullish and bearish divergence is a fine thing to look at. It's a good technical indicator for people who are trading, but we have to be careful. These kind of technical indicators, when you've got so much going on in the macroeconomy, for me, they hold much less weight. Right now, if you were to ask me that TA versus understanding what's going on in the macro is going to have 90% of my attention right now. Macro will drive what happens, because if suddenly Bank of England decides to intervene, how does the TA take advantage of that? TA doesn't know about that, right? They didn't know that was going to happen yesterday, so your bullish divergence can be nullified. So we need to understand what is going on in the macroeconomy, so do be careful, but it's good if you spotted it. It's good if you can identify it. It gives you structure to your thoughts in the chart. So again, not fully buying into this, and I do want to see what happens in terms of the broader macroeconomic theme. We need to continue to monitor that. Now, if we take a look at the Fed rate monitor tool, I do also want to share what we're seeing priced in here. So we're starting to see the pricing in happening here. And you're seeing, again, 60% of the market is now pricing in 75 basis points in the November meeting. Okay, so we're expecting another 75 basis points. Remember, that will take us to 3.75 to 4. The Fed have said they want to get to at least 4.5, 4.6 range by next year, and then we can maybe talk about keeping it there / pivoting. Remember, the pivot is when you start to bring it back. So let's see what happens when we start to see that play out over the next set of months and meetings. Now, what am I doing in this market? Guys, you can see we're in the bottom of this channel, right? This is not a horrible place to be dollar cost averaging. Right? If you're in terms of your long-term position, you're at the bottom of the channel, close to 18,700. There's no clear break of structure. We've shown good strength for this level. Yes, there's a risk to the downside, but if you're nibbling and not going all in, you can just nibble even more lower down. And that's something I would be doing right now. You guys know I've been dollar cost averaging for a long time. I'll continue to buy, and I'll buy more aggressively the closer we get to 17,600 to the downside. If we start pumping, and you can get a pump, if I'm showing you here on the daily ribbon, even all the way up to this level here, at the top of your daily EMA ribbon, 20,500. There's plenty of room for Bitcoin to get a relief rally. I'd even argue it could do something like it's done here, where it goes to the top of the channel to 21, 22,000. Again, that is the kind of move that will not give me FOMO. I'm not going to get super excited, be like, oh my God, we're going to head back to the moon. That is not what we're seeing, right? This is just still hugely controlled by the bears. You can see what's happening here. If I zoom out now onto the weekly, hopefully this will remind you even more of the situation that we are in. We're trying to create this W pattern. That is our route out here for Bitcoin, right? Fall, touch, and start working your way back up. That is the route here for the Bitcoin to fall out. Now, the bears will not want to do that. The bears will want to do this, let us consolidate a bit and throw us back down to the downside. So that's what we need to watch out for. Do not be surprised to see Bitcoin, if macroeconomics go in its favor, to try to move up to this level. But here's the catch. And the catch is that we're seeing the dollar index continue to do good, right? I mean, if we look at here on the dollar index, look at this here on the weekly chart. Huge strength. Now, if I zoom this down to the daily chart, that red candle you're seeing from yesterday, that is why we saw crypto pump, right? We saw crypto pump, but what did I say? And I said it specifically on the 4-hourly chart yesterday in my car video. I'm updating you on the road, and I said, guys, look, we're having a good day, but look at this on the 4-hourly. All we're going to do is come and cool down into our EMA ribbon. Did I say that? Of course I said it. Comment below if you heard me say that. And I said we're going to bounce. So now we need to watch out, because if dollar index does bounce to the upside and create a higher high, then we're going to be in a problem. For the bulls, we need to close the 4-hourly candle below. We need to close that 4-hourly candle below. That is going to happen if the GBP and the euro show some improvement. Then we can close dollar index below the 4-hourly EMA ribbon. So the 4-hourly EMA ribbon here at the bottom is a close below 112.3. 112.3 is what we need to look at here for the dollar index. Now, in order to see if that's going to happen, what is the GBP saying? GBP is running into resistance, and this is what I said in yesterday's video. Yes, it had a nice move, it recovered after a huge dump to the downside, but you're running into resistance. So until you flip this bullish, I can't buy into the fact that the bulls are in control. For me, the bears continue to be in control here, okay? And same for the euro, exact same pattern, just consolidated into its EMA ribbon, but the big trend is to the downside. So never get caught up in these short-term pumps unless you're a scalp trader. Understand what is the bigger trend. So there you have it, guys. That is what I'm watching for in the market. Hope you guys are navigating this really well. Great opportunity for long-term holders, as we can see. As I shared with you guys, look at the levels we're now sitting at in terms of retracements, right? Huge. Let's pull this up as a final thing to share with you. Crypto Rover shared this on Twitter, and this is from Glassnode Metrics. We've looked at this many times before, but look at the levels of retracements from all-time highs. Now, we're now close to levels which are only seen in bear markets. Bear market here, and previously, okay? So you definitely are in a period where the market is hugely retraced. So for anybody trying to scare you to say, oh, we're just going to fall back to 8,000, we're going to fall back to 5,000, that's all scaremongering tactics. If you've seen a couple of cycles, you've seen them before, you get the opposite of those people in the bull run. We're going to head to $1 million on Bitcoin, and you just need to take out the hyperbole and bring it in, take out the amplitude of those waves where everyone's like, we're going to go to the moon, we're going to the grave, we're going to the moon, we're going to the grave. Just keep it level-headed, keep it pragmatic, keep it rational, and you'll be able to navigate this market. I hope you guys enjoyed. Smash up likes. Don't forget to subscribe. Check out the TA calls. Links in description. If you're trading, BYBIT, BITGET are the two platforms I use, and they support the channel. So thanks for watching, and I'll see you in the next one.